All right, so today I'm going to cover one of the more popular down payment assistance programs, which is also one of my personal favorites, and it's the My Home Assistance Program, which is funded by the state of California. Now, even though this is a government program, you do still have to go through a lender that's approved by the state of California to offer the program. We are an approved lender, so if you have any questions after watching this video, or if you'd like to apply, feel free to contact me and I'll let you know how to get started. So this video is going to cover four things. Number one, how to qualify. Number two, how the program works. Number three, how much of your own money you're going to need to buy a home when using this program. And number four, we're going to cover the negative aspects. Even though this is a fantastic program, it does have a couple minor drawbacks. All right, number one, how to qualify for the program. In a nutshell, the state of California will help you with the down payment on the purchase of a home as long as you meet three criteria. Number one, you cannot have owned a home in the past 3 years. Number two, you must have a minimum credit score of 640 or above. And finally, you must meet the income limits. The income limits do vary by county, but they are pretty lenient. For example, in Sacramento County, you can make up to $150,000 a year, and in Contra Costa County, you can make up to $192,000 a year and still qualify. And one thing to mention about the income limits is the income limits only apply to the person on the home loan. And what I mean by that is, let's say that both you and your spouse's combined income is too high for the program. Well, in that case, we would look at doing the home loan under just one person's name. And as long as that one person's income is under the income limit, then you can still qualify for the program. All right, so next let's cover how the program works and how much of your own money you're going to need to get into a home. The most popular first-time home buyer loan is called an FHA loan, and it has a down payment of 3.5%. So for example, on a $400,000 home, a 3.5% down payment would be $14,000. This My Home Assistance Program covers that entire down payment. So if we can get the seller to cover your closing costs, which I'll cover that in a different video, then you'd be able to get into the home for no money down. And if the seller's not willing to cover your closing costs, then typically you're going to need somewhere between $3,000 to $5,000 of your own funds. So worst case scenario is you're going to need $3,000 to $5,000, but in most cases, our clients do get into a home for much less. One important thing to cover is that the money that you receive from the state of California to help with the down payment is not free money. It is a loan from the state of California. Now, there aren't any monthly payments on this assistance loan. It just kind of sits there, but it does have to be paid back in either 30 years or whenever you sell the home, whichever comes first. So if the down payment assistance is a loan, then what's the interest rate on that down payment assistance loan? Well, the down payment assistance loan is actually broken up into two parts. Roughly half of the assistance has zero interest, so it is interest-free, and the other half has a low interest rate of 2.5%. Just to kind of give you a little bit of perspective, if you were to buy a home at $300,000, the interest that would accrue from the down payment assistance loan would be about $20 a month. There are four quick things I want to point out. Number one, you do have to move into the home. This is for owner-occupied loans only. Number two, the home has to be on less than 5 acres of land. Number three, this is for single-family homes, so a house or a condo is fine, but something like a duplex or a multi-unit property is not allowed. And lastly, I do get asked all the time, can I pay these down payment assistance loans off early or anytime I want to? And the answer to that is yes, you can pay them off anytime you want to, but most people do wait until they sell their home. So now that we covered all the good stuff, which is how you can get into a home for practically nothing down, let's talk about the drawbacks. So there's two small drawbacks to this program. The first one is your closing costs are a few $1,000s higher. Now, these closing costs are covered by the down payment assistance, so you're not paying it out of pocket, but it does get added to your loan amount. And the second thing is the interest rate on your home loan when you're using down payment assistance is a little bit higher compared to a loan that does not use down payment assistance. So your monthly payment when you use down payment assistance is usually around $50 to $75 a month higher compared to not using it. So really you just have to decide, is it worth saving $10,000 to $20,000 on your down payment if your mortgage payment is going to be a little bit higher? Hey, that's pretty much it. If you have any comments, please leave them below. And if you know anyone that's thinking about buying a home or anyone you think should buy a home, if you do me a favor and hit that share button below, I'd appreciate it.